As said by Thomas Henry, economy does not lie in sparing money, but in spending it wisely. Hello everyone, this is Tejashwini Mandava from Group 4 and my friends Viraj, Badrinath and Harsil are here to present you our final project presentation on the topic Should Canada raise taxes at least $1 billion on large banks to help pay for pandemic spending? And this is under the course Finance in a Global Perspective. Firstly, we'd like to thank our professor Imran Abdul for being a supportive mentor throughout the course and emphasizing the need of understanding the global finances. To start with the contents, we have tried to analyze the topic by breaking down it into three parts and started our research. These are the three topics. What did the government spend during the pandemic? Impact of the pandemic on large banks? Should Canada raise taxes on the banks? To start with my topic, what did the government spend during the pandemic? I have found the official expenditure from Statistics Canada and I have realized that Canadian government spending surpassed $1 trillion in the year 2020 with an increase around $270 billion from the previous year. Social protection, economic affairs, and healthcare contributed to their most spending. The Canadian federal government increased spending on social protection, which accounted around 31% of the total spending in 2020. The benefits of unemployment were raised to $140 billion, mainly due to the Canada Emergency Response Benefit and a subsequent Canada Recovery Benefit. Here in this slide, I have tried to attach the government expenditure on various sectors, which include social protection, education, healthcare, economic affairs, and others. With the government expenditure on this slide, spending on economic affairs rose by 109.1% from 2019 to $162.5 billion in the year 2020. The bulk of this increase was attributed to the Canada Emergency Wage Subsidy in order for the protection of COVID 19. In the year 2020, economic affairs took place of the education as the highest expense with a 15.2% of the total government spending, and it is recorded as the third largest expense of the whole government spending. The overall government spending on healthcare rose up to 17.2%, which is around $221 billion in the year 2020, accounting for 20.7% of the total government expenses, though not at the same rate as social protection and economic affairs. This constitutional structure of the spendings in the north differs from the provinces, which leads to the variances in the government finance and statistics. Now my friend Viraj will handle the impact of the pandemic on large banks.
Thank you, Tejaswini. Hello, everyone. Now I will explain impact of pandemic on large banks having annual revenue over 1 billion. We have divided this into four subtopics. First, reviewing banking system in Canada. Second, looking into banking sector in early stages of pandemic. Third, banking sector in the later stages of pandemic. And lastly, status of Canadian banks during the pandemic. Firstly, talking about banking system in Canada. Canada's banking system is among the country's most vital assets, with many banks among the country's largest and most successful businesses. It is controlled by a few major banks, with the top 6 banks accounting for 90% of the market. The Royal Bank of Canada and the Toronto Dominion Bank are the two largest banks in Canada and are in the top 25 banks in the globe. Financial institutions in Canada provide excellent service and make significant technological expenditures. According to World Bank data from 2017, Canada has 227.82 ATMs per 100,000 adults, ranking third in the nation. The major complaint leveled about Canada's banking system is that it is a monopoly with little rivalry and hence higher pricing for Canadians. As a result, existing banks become wealthier and more powerful in Canada's financial market. The big 5 banks that monopolize the financial system are Royal Bank, the Bank of Montreal, CIBC, the Bank of Nova Scotia, and Toronto Dominion Bank. Royal Bank of Canada has always been the biggest bank in recent history, with over 17 million customers globally, over 86,000 full-time staff members, and over 1,300 branches. Though TD Bank has nearly caught up to the RBC in recent years, with 9.6 million customers to 25,000 workers and over 1,100 branch offices. Furthermore, the Bank of Nova Scotia is nation's second bank with 11 million Canadian clients, 10 million international customers, 92,000 full-time workers, and over 900 locations, followed by Bank of Montreal and CIBC. Few additional banks with revenue over 1 billion are Desjardins Group, National Bank of Canada, HSBC Bank of Canada, and Laurentine Bank of Canada. Next, we look into banking sector in early stages of pandemic. The COVID-19 pandemic is a life-threatening situation to individuals all across the globe as well as a substantial disturbance to everyday life. It is having a significant influence on the world and Canadian economy. Earnings and credit management, customer connection, and commercial models are the major sectors affected by the pandemic in banking industry. Business continuity management and operational resilience to the stock market's high volatility lowered the values of bank. The low inflation rate combined with the major impact of COVID-19 is lowering core banking profitability in mature economics. The banking industry has become one of the hardest hits with banks' values falling in all nations across the world. The ratio fell from 1 to 0.69 by 30th April 2020, while Canadian banks are still operating at a NAV ratio of 1.15 on aggregate. Now, the further subtopics will be explained by my friend Harshil.
Thank you, Vraj, and hello everyone. I will explain the rest subtopics. Talking about the banking sector in later stages of pandemic, although when compared to pre-pandemic periods, Canada's top banks have managed to render profit rise in less than a year. All six of country's largest banks reported better net profits in the 3 months leading up to January than in same period last year, when the coronavirus had expanded broadly across Canada. Most of the profit growth and beats in first quarterly came as a result of the bank reporting significantly lower credit loss provisions than in previous quarters. When COVID-19 broke out, set-asides were much lower at all six banks than they were 1 year ago. Robust financial markets boosted profitability at Royal Bank of Canada and National Bank of Canada, which have spent decades expanding their investment in banking and trading businesses. Canada's finance industry rebounded sooner and better than many other sectors, thanks in part to extraordinary government subsidies that guaranteed Canadians and Canadian companies could weather the crisis. Big banks have managed to outperform on quarterly results. According to statistics, RBC Canada biggest bank earned 4.3 billion in third quarter. Furthermore, since the start of the epidemic, the operational revenue of Canada's six major banks has climbed by more than 17%. Moreover, giving a brief about status of Canadian banks during pandemic. During crisis, the bank's purpose would to be assist Canadians in getting through in this tough time by making financing reasonable and accessible. Because many economic operations are temporarily halted, businesses rely on debt to pay their staff and etc. In order to achieve their core goal of maintaining inflation close to target, they must stabilize economy and jobs. For all of these reasons, Bank of Canada is functioning in variety of ways to endorse the economy and financial system, to instantaneously enact a sequence of relief initiatives aimed at developing tailored support plans for individual and small businesses to help manage financial ambiguity and mitigate the fiscal effect of the global epidemic. As we can see from figure, prominent Canadian banks saw their highest revenue during the outbreak. As a result, Canadian banking sector's importance remained robust and demonstrate a favorable propensity in such situation. Banks in Canada assist over 800,000 homeowners with loan flexibility, and more than 482,500 people with credit card payment deferrals. In all, about 2.1 million deferrals were granted by Canadian banks on all personal credit products, including mortgages, credit card, line of credit, personal loans, and vehicle loans. The six major banks in Canada have agreed to remove more than $112 million in fees for personal bank accounting beginning in March 2020 to February 2021. Besides from that, bank decreased the interest rate to 0.25% in reaction to the economic repercussions of COVID-19 in order to encourage economic output. These actions benefit both businesses and consumers by cutting payment on current and future loan across the economy. Now the further slide will be explained by my teammate Badrinath. Thank you.
Now the banks with the largest lenders exceeding earnings projections for the third quarter. According to the Canadian Bankers Association, they paid 12.7 billion Canadian dollars in taxes in 2019 while employing more than 280,000 people in the process. However, according to data from the Tax Foundation, Canada's combined federal provincial corporation tax rate of 26.5% is the third lowest in the group of seven, after only the United Kingdom and the United States. According to Abacus poll, at least 70% of the Canadians believe that large firms and rich individuals are not paying their fair share of taxes in our country. Moving forward, due to the recent COVID-19 pandemic that started during the month of December in 2019, housing prices in Canada have become a main concern for people in the city. Citizens across the country are not able to afford houses because of the recent inflation caused by the pandemic. Banks often pass on the expense of higher taxes to borrowers in the form of higher interest rates and service fees. For homeowners, this would entail additional costs in a property market that is already out of reach for many Canadians, with the average home costing about $669,200 in the last year. Individual borrowers would be hit the hardest by any increase in bank fees and rates rather than business clients, because they have fewer options and lenders would vary of upsetting larger, more profitable consumers. There are a few benefits if the bank tax is increased. A tax hike will limit revenue that would otherwise benefit the majority of Canadians who owns shares in banks, either directly or indirectly through pensions and mutual funds, including the Canadian Pension Plan. When the pros and cons are compared, there are more negatives when compared to positives if the bank taxes are increased. In conclusion, we disagree with the offered statement, since in the event of a pandemic, Canada should not raise taxes on large banks because an expansionary fiscal policy must be implemented. Going ahead, the government should try to focus on lowering tax rates and increasing public spending in order to provide stimulus and support. It will help in lowering taxes in order to help in pandemic spending, and this issue will be resolved by the government taking an initiative to provide stimulus for economic development rather than charging the most important tool for monetary policy implementation. When the economy is in a state of flux, monetary policy should be implemented with the goal of stimulating demand. Canada should strive to stimulate demand by expansionary fiscal policy rather than charging it to banks, which would reduce demand. Thank you.
Thank you, Badrinath. Here are the references that we have cited data from these links, and thank you everyone for giving us your time.